Can you talk a little bit about what today's rate hike and the new projection means for interest rates moving forward, not just in terms of like how high they'll get, but in terms of the impact having elevated interest rates for longer might mean for the economy?
Well, look, the short answer is the same answer to the previous question. We're going to be taking each decision one at a time. We're going to have, we'll take each decision based on the best available information on that time. What can we say? What we can say is, what we see is that monetary policy is working. Inflation's coming down. We also know that monetary policy works with a lag. So we know that the full effects of the past interest rate increases we've already done have not fed through. We will be seeing that impact going forward. The other thing we're seeing, though, in the economy is that those underlying inflationary pressures, they are stronger than we expected. With the increase in our policy rate in June and July, our own forecast has inflation hovering around 3% for the next year, and then coming down gradually to the 2% target in the middle of 2025. So, I mean, what does that mean? I think it means that we think we're close, but what I would highlight is that there are a number of things that have to happen for that forecast to be realized. There are a number of things that have to happen for inflation to ease back to target. And as I mentioned in the opening statement, there are two that we're particularly concerned about. We're concerned that we've been surprised by the persistence of excess demand and underlying inflationary pressures. We know that our past interest rate increases are feeding through. They're having an impact, and there's more to come. But what the total impact of those interest rates is ultimately is uncertain. And then the other thing is, in our own forecast, inflation hovers around 3% for the next year. What that's telling you is the downward momentum in inflation is waning. And we are concerned that if we're not careful, the progress to price stability could stall. And if you get some upward surprises from there, inflation could even move back up. So we've been clear about the indicators we've been watching. I think it's clearly too early to be talking about interest rate cuts. We are certainly trying to balance the risks of over and under tightening, and we'll be taking it one meeting at a time.